what day it is. Guess what day it is? Hump Day, baby. Welcome to the Hump Day edition of the Daily Market Commentary. Hope everybody's having a phenomenal week. As the markets, are we seeing a little bit of a hump on a rollover? As there was an interesting day yesterday as we saw the Nasdaq climb and the Dow fall. So a little bit of a divergence there in those markets as we saw that some of the tech-heavy stuff was rallying pretty hard, but some of the more the blue chip names were coming down a bit, and so the S&P was mostly flat. So let's take a look at what's happening for today in our big picture markets: the S&P, the Nasdaq, crude oil, and gold. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell, and then leave a thumbs up. It means a lot. I appreciate it. Let's go ahead and get started with the big picture. So in the big picture today, we have four major markets that I want to take a real quick look at. So we're going to start a little bit different today than we normally do, and we're just going to look at our four equities markets. So starting at our four equities markets, we have our S&P, Nasdaq, the Russell 2000, and then the Dow Jones. And that's these four markets that we're taking a look at. And what we can see, and I'm just going to zoom in on the last couple of days worth of trading. So looking here at just the last few days worth of trading, we can see that there's a clear divergence between the directions of these four markets. Whereas we can see very clearly that the Nasdaq is continuing its run higher. The S&P is rolling over a bit. The Russell has actually been very weak, the weakest of our markets. And then the Dow has also been a bit weaker. So in looking at those four markets, what that tells me is that I think we could see the Nasdaq also roll over the course of the next few days. So as I look at the Nasdaq, I'm going to put a line right here. And to me, this is our if we're going to get a breakdown, this is where you get it. Okay? I don't know that we definitely will, but this would make the most sense because it was our prior area of resistance. Old resistance oftentimes acts as new support, and neither one of these are quality areas of demand. So I wouldn't be surprised today to see the Nasdaq break down below here, and you can get a run down to about 14.4. So I think that would be the level that I would look at for today in the Nasdaq. Now, down here at about 14,397, you have a really nice wick over wick area on the hourly chart, which was the origin of a move higher. That's a pretty good stopping point if we do break down below here. But from 14.5 to 14.4, that's 100 points in the Nasdaq. And so that's a pretty good trading day for Nasdaq range. Taking a look at the S&P is, we've got a 15-minute level right here, but the S&P is already showing me a little bit more weakness than the Nasdaq as it didn't have the same rally yesterday. And when I take a real quick look and I look at the heat map of the markets yesterday, and we look at the Nasdaq 100, we can see that the Nasdaq was bolstered by the big ones in Nasdaq: Microsoft, Apple, Google, Facebook, Amazon, and Tesla are really the biggest ones that drive the Nasdaq, right? And really, Microsoft, Apple, Google, and Facebook and Amazon are the big ones. Tesla's really just starting to come up. But note that there's a lot of green on here, strong green. And then you've got a slight down day in some of your other markets, right? Now, when I take a look at the S&P, we can see the S&P is much more even, but it's being held up by the Microsoft, Apple, some of these bigger names. Whereas the ones that are coming down are in this orange color. It's a little bit more half and half. If we look at the Dow Jones, the Dow basically had 1, 2, 3, 4, 5, 6, 7, 8 green stocks, and everything else was red. right? So when we look at what's left in the Dow, you've got healthcare, consumer staples, communications, industrials. Really, the market was led by tech, information technology, and consumer discretionary. That's what led the market, right? Was the consumer discretionary sector, Home Depot and Nike, and the IT sector and the technology sector, Visa, IBM, Salesforce.com, Microsoft, and Apple. Those were all bullish. Everything was bearish in consumer staples, communication, industrials, energy, materials, and healthcare. So going back to the Nasdaq, I mean, that's what makes up the most of the Nasdaq. And that's why we see different markets diverging and going different directions. So what does that tell me about today? Well, that tells me that we could see the technology stocks follow suit with some of the industrials and some of the bigger names. And if we do, then we would look for a breakdown below here. But I'm not willing to even think about a breakdown until I get some basing in front of this level for price to drop. Now in the S&P, because it's a little bit more, we'll call it even, a little bit more half and half, if you will, I would say that from a breakdown perspective, we've got a 15-minute level here. I don't like it as much with the weakness that we're seeing. I do still really like this hourly area of demand down here at 42.45, which is the origin of this move higher. But I would say that your breakdown line isn't until here. This is really your key breakdown line in the S&P, where if price comes to that area, that would be where I'd need to see a breakdown. Can I take a reversal trade before we get there? Yes, you can, if you're so inclined, especially with our most recent upper wick here being so long. We'd have to get lower than this candle's low as an opportunity to get in, and I really want to do that more on hourly charts. Hourly charts are better for candle-to-candle style of trading. All right, so sliding off of the equities, let's move over and talk about our commodity markets, gold and crude oil. So crude oil, we did get a nice move off of our confirmation short. This was a confirmation short area, and this was a level identified on a smaller time period. So here on the 15-minute chart, and we have a drop, base, drop. Now, what was great about this level, it was a prior area of support. Old support oftentimes acts as new resistance. And what we can see here is that we traded more than halfway into the level, which gave us a potential for an entry. The second time through, we hit it and moved away. The third time through, we broke through. So we're not surprised at the fact that price is rallying, because that's the way these confirmation entries should work. So now, what would be my best entry? Well, looking at this on the 1-hour chart, we're sitting below a supply area, but I don't believe that supply area is going to hold. I think we're going to bust through that supply area. If you're so inclined, you can take a little bit of a breakout above here, but I actually like the reversal back down to this area right here. I think 73.40 by 73.23 is a pretty decent reversal point. And then gold. So gold, we've been talking about the breakout, and yesterday we did get the breakout, and we did break down below our more aggressive entry, and then we've come up, and now we broke below the less aggressive entry, the more conservative entry. Now, since it broke out, it didn't do anything. So if you got in and you took the 6-candle rule, you may have realized that, hey, this isn't really going anywhere. But it doesn't mean that the down move is over. Take a look at this. We've got a nice descending triangle pattern, which is a pretty standard breakdown setup. And so it doesn't always break down. There are times when you expect them to break down and they wind up breaking up on those triangle patterns. But let's see if we get a breakdown below 1750. And so I would say that makes the most sense from this 4-hour chart, as that's the setup that we have going right now. So those are our 4 markets for today: S&P, NASDAQ, crude oil, and gold. Insofar as our stock of the day, I don't really have one to go over. I've taken a look at a bunch of different ones over the last few days. I figured I would spend the extra time going through the equities today, but love to hear your comments down below. I mean, are you trading the S&P? Are you trading NASDAQ? Are you trading the Dow? So leave your comments down below. We always love to hear from you. Until tomorrow, everybody, hope you guys have a great day. See ya.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.